This chart shows you the volumes of crude oil and LNG that have flowed via the Strait of Hormuz from Gulf nations in the last 14 months. And you can actually see that Saudi Arabia is the biggest exporter with 2.4 billion barrels. Next up is Iraq with 1.4 billion barrels and the UAE. And the biggest importer has been China with 1.6 billion, and the rest of Asia also making up 1.6 billion. And so this is beautifully showing you that the majority of crude oil from this Gulf region is actually exported to China and Asia in general. And we're not really seeing big exports happening to the United States or Europe. And so this actually shows you that the supply disruptions that we're currently witnessing are rather actually important concerning the Asian markets. But we have also seen that Brent crude oil prices have been going up, as well as those crude oil futures that are traded here on the New York Mercantile Exchange. And so generally, we can say that the oil prices all over the world are currently going to the upside, with this recent top here at around $120 per barrel. Now, we have now actually recently retested this support that's actually marking the top here that we've seen previously in 2023. But we're currently still heading higher actually. We're seeing that the cumulative volume delta has actually been quite neutral in the last few days and weeks. And so the technicals are certainly not really giving us really bullish, neither really bearish signals. But to really understand the key drivers of this commodity, we have to take a look at the fundamentals and macroeconomics, because history is actually always repeating itself concerning oil prices. We do tend to see divergences actually occurring before those massive sell-offs occur. Now, for example, we've seen that sell-off occur here in 2008. We've seen that sell-off here occur in 2014, in 2018, with the COVID crash as the ultimate crash that actually ended this bear market. But we've also seen that several times throughout history, this actually occurred because of a divergence, or after a divergence, where the copper to gold ratio moved to the downside and oil prices moved to the upside. And that ultimately led to those crashes that we've just named. Now, this really happened throughout history, and what is currently happening is actually that we're seeing history repeat once again. We're seeing oil prices skyrocket, and we're seeing this copper to gold ratio still in decline. Now, why is this happening? Well, we tend to see gold outperform the copper prices in times of economic stress. We tend to see gold as this safe haven asset obviously outperform copper when we start to see economic stress. And now that is exactly what we at Chronos believe we are currently seeing, because in addition to that ratio, we're also seeing that the gold to S&P ratio and the gold to silver ratio, which are obviously quite similar, because gold obviously starts to outperform the S&P and also silver in times of economic stress, and therefore we tend to see those ratios rise to the upside in those instances as well. We've seen that happen here, for example, with the great financial crisis, but we've also seen that happen throughout history several times actually. For example, here with the COVID crash, we've seen that actually skyrocket. Now, obviously, concerning what we're currently seeing happening concerning those ratios, we're also seeing that they've actually reversed here concerning the gold to silver ratio. We are currently seeing it actually move in this upwards trend. And concerning the gold to S&P ratio, we do also have witnessed this long-term bullish trend actually forming out at this ratio. And in fact, we argue that we are in a bear market actually for quite some time, and this has actually also only been propped up by the fact that we've seen inflation and a dollar devaluation. Because if you have a look at the S&P 500, not measured in dollars, but in gold, in fact, if you invert this chart, which is the gold to S&P ratio, this becomes the S&P to gold ratio. Now, when you invert this chart, you can actually see that this is the S&P 500 measured in gold, and it actually topped out back here in 2021. Now, we have seen that a big decline, and historically, whenever we've seen that happening, that ultimately really led to big crashes. For example, here in 2018, where oil prices actually also topped out, we've seen that this ultimately started the bear market concerning this ratio, and then we've ultimately seen this COVID crash. We've also seen that the dot-com bubble basically began this way. We've also basically seen this that the great financial crisis began this way. And so we at Chronos argue that we are currently seeing history repeat once again. We argue that this inflationary boom that we're currently witnessing here to oil prices is certainly it's certainly limited by time, and as this war is now going on for quite some time, we're also seeing this probably consolidate at a certain level that seems to be priced in fair. Obviously, we are currently seeing massive volatility, and we do expect that this could actually keep on going as we're seeing those tensions in the Middle East. But at Chronos, we expect that this is a short-term move that we're currently seeing here at oil prices, and we do believe in a short deflationary crash happening, or maybe even a longer one, as we've seen it here happen throughout history. Obviously, we could see this being less severe because of inflationary pressures that will then actually regain some strength. But ultimately, we do believe a crash is up next in 2026, and so I hope you enjoyed the video. I hope you learned something new. If you did, don't miss subscribing and liking the video so you don't miss future videos, and also support us for work here on YouTube. You can also check out our Discord server and write us a nice comment down below, so it really boosts the algorithm, and you would really support us for our work here on YouTube. Thanks for your support. See you the next time. Bye bye.